You're basically seeking to lure investors by handing out very generous payments. How do you drive profitability?
So first point is common equity, is capital, because you can pay significant dividend because you have significant capital strength. That's the first point on our story. Second point is de-risking, so reducing non-performing loans in a significant way, so reinforcing coverage ratio on non-performing loans, now becoming the #1 bank in Europe. And then it is possible to use profitability in order to pay dividend. And profitability is the result of our very strong business model, wealth management, and now wealth management and protection.
Yeah, so if you look at basically the plan, right, you're focusing basically on the more lucrative sections, which is wealth management, private banking, and insurance.
Yes.
And you've also not ruled out teaming up with someone to be stronger in those sectors.
So on private banking, we think that we can continue to be a leader without any kind of help of other competitors or other players doing this job. In insurance business, we want to reinforce our own factory and the work that they are doing with our distribution network. That is really the strength of Intesa Sanpaolo. In asset under management, we can evaluate partnership in order to grow in Europe, because we think that scale is very important in the asset under management business.
So is there a country, is there a region where you think actually you can strengthen the asset management business?
So the point is that the asset under management in the future will be a business in which you need to have scale. Other players in Europe are considering to make alliances, so we can be a player that can consolidate alliance with other players, maintaining majority. And to do this, we need absolutely to reinforce our credibility, and we are looking for partnership with some very important global asset under management player.
So it would be big international, well-known players.
Yes, that's right.
Looking to combine.
To put a stamp of quality on our asset under management, and then to allow us to work with other players in Europe, try to make combination in order to create a 1 trillion company in Europe.
Are you close to a deal? Are you speaking to anyone at the moment?
So we are starting this conversation, because this is not priority #1 of the plan, because at the end it is an area in which we are delivering a significant net income, and we will continue to deliver net income, but it is part of the story that possible during 2018 I will try to give some more details to the market.
Last year you bought more Val, so these are kind of like small boutiques. Would you buy any more of those, the smaller ones?
If we talk about boutique, the point is that we will reinforce by definition financial advisor and private bankers and other teams. So if it is possible to buy teams through the acquisition of small boutique, I can also consider this point, but without paying goodwill or significant impact on capital.
What do you see as your biggest challenge to deliver the plan? I mean, the plan was, you set it out 2 days ago, really in the midst of one of the worst market routes in the last 18 months, and yet investors actually took up your plan and the share price increased.
Because it was also conservative on the assumption, because in the plan we considered a zero-rate environment also in 2021. That is really conservative, because in reality we will have potentially an increase in interest rate, and so this means that for each 100 basis points increase, we can have 1.6 billion euros increase due to our sensitivity. We are a big retail deposit player. But on the other side, the real complexity of the plan is that we will have 9,000 people leaving the organization during the next 2 or 3 years, and we have to redeploy and to train another 5,000 people. So that's managerial complexity that I see in this plan. But my people are really skilled, and the motivation in the organization is so high that I think that we will deliver also this business plan.
How are the talks going with Intrum about the sale of the bad loan platform and bad loans?
So on bad loans, we delivered a reduction of 13 billion euros in 2 years' time due to our very strong performance in recovery machine, and target is to reduce 26 billion in the next 4 years, so it is achievable. But if we can improve our ability to make recovery to a strategic alliance, we are ready to do this. I think that Intrum is a very good player in the market, and so is one of the possibilities that we are considering in the plan. That's something, again, that we will assess during 2018, because our target is to go below 10% gross during 2018.
Carlo Messina, have you spoken to Ray Dalio? recently?
No, when we had a conversation in International Monetary Funds in October, it was short on Intesa Sanpaolo and on Italy, and I told that he can lose money. And at the end, I think that he lost money on our position, especially in Intesa Sanpaolo. Again, increasing the position, I think that he's losing money again. So
$3 billion. I mean, he put $3 billion, right, shorting Italian banks, saying that the election on March the 4th will be disruptive, and you're his biggest short. Has he called you at any time?
No.
Okay.
No. But I think that at the end, it is typical of this big player in the market. They decide to make short or long. In Italy, there could be some volatility, so it is understandable that you can take position. I think that at the end, we are so strong in fundamental that it is difficult that you can have an impact in the short term, and then delivering the business plan, we are in a position that during this period, probably we can win this competition with him. That we will see.
Okay, I mean, the fact that you call this a competition is quite good. Do you believe that the Italian elections will be disruptive? Could we actually see quite a lot of volatility in banking stocks?
I don't think at all there can be any kind of disruption, because at the end, the priority for if you have a government in the future in Italy, the only priority should be to reduce youth unemployment, so unemployment of young people, and to reduce public debt. But at the end, my expectation is that the government will be absolutely in a position to reduce this 2-point weakness of the company. And also Mattarella, the president of the country, is such a strong and reputational guy that will for sure deliver the best solution for the country.
But so how do you explain this short? I know it's difficult, right? But I keep on hearing from Italian CEOs and from people that are pushing reforms in Italy that actually the banking system is stronger than it's been the last 5 to 6 years. So why is Ray Dalio putting that position in your mind?
So I think that it is probably looking at populistic approach in Italy, trying to elaborate on you can have a euro breakup, you can have a difficult situation deriving from some point that some parties decided to take in the past, but now they are changing their mind, because if they want to have an approach to make government, Italian people are on average against the euro breakup, and so at the end that's the position. But it is understandable that you can try to make money, make shortage. So the dimension is really big, but.
What should the new government, whoever that may be, actually do to try and facilitate the sale of NPLs from banks?
So I'm not relying at all on government, so I have to tell you that I can tell to the market, yes, I think that it would be very positive. I think that a bank should do the job without having any kind of expectation of improvement from government. You have to deliver on your strength, and that's what we are doing, and we will do also during this plan.
Are you worried that actually your bank gets infected by the share price? I guess may be volatile if the NPLs and also other banks aren't taken care of properly, though.
So the point of other banks is that, in my view, all other players in Italy are doing the right job. So so we are in a very good position, because we started 2 years ago, so in advance, with a strong internal recovery machine. But also other banks are doing the right job, so Banco Popolare, UniCredit, so other banks are doing the right job in the country. So I'm really confident that also this point will be assessed during 2018.
Carlo Messina, we usually talk about monetary policy, and I guess this week is a little bit different, because as you were about to present your plan, the markets were going haywire. How do you explain this kind of sudden volatility angst? Is it because we haven't seen much volatility in the markets in the last 18 months, or is it something a little bit more sinister?
So the real point is that you cannot have forever a bullish market. So that's the point. point. So, and a reduction of 5%, 10% is absolutely physiological. So I think that there is too anxiety in looking at short-term performance. On medium-term, fundamental of real economy is strong. Is much stronger in Europe probably than in other parts of the world, and also in Italy, fundamental are strong because you are not only having export-related demand, internal demand, but also investments that are recovering. So that's a story of fundamental that are strong. Then it is clear that from a financial point of view, you cannot have every day an increase in price of the companies.
I mean, do you worry about market volatility, or do you worry more about the day when the ECB starts tapering some of the QE and therefore the spreads, for example, between Italian spreads and German spreads widen?
If I have to tell you what I consider important for Europe is the exchange rate, so currency more than interest rate or volatility. So the impact that interest rate can have on
exports?
Yes, exports. That's a real point. But in any case, I think that at the end, with the reduction of the quantitative easing and the impact, especially on Italy, will be not so significant because the debt is sustainable. The real point is that if we want to increase the speed of growth in the country, we need to reduce in absolute terms the debt and to use funds in order to speed up the growth and try to reduce unemployment in the country.
So if you look at Italy, Italian reforms, politics, do you think a higher euro strength is probably its main concern right now?
I think that it is probably a concern. Yes, that's a point. That could be a concern. But looking at the Italian situation, also the currency is very important because it is a strong country devoted to export-related companies, and this could have an impact. Probably not so significant, but that's one part of the story under which you have to pay attention.